Many people are not aware of the fact they may use their retirement plan assets to start a new business venture. For a complete review of the pros and cons of this type of transaction, you should go to the website www.sba.gov. The SBA website focuses on how these plans work to have access to the capital necessary to fund a new startup, and why it's important to use the services of a reputable company that specializes in these type of transactions. At Killingsworth Spencer CPAs and Advisors, we could not agree more with what the Small Business Administration has to say about how you can use your retirement accounts as a way to fund your dream of owning a small business. However, we will focus today on an area not covered in detail on the SBA website. What happens when your business begins to grow and then flourish? First, the entity must be set up as a regular corporation, or what is also known as a C Corp. Small business owners began to shift away from these entities in the late 90s because, among other reasons, they are subject to double taxation. After salaries are paid, and they cannot be excessive, any profits paid to the owners are doled out as dividends. But the corporation pays the taxes first, and then the dividends received by the owners are taxed again upon receipt, hence the term double taxation. Retirement plans do not pay taxes on receipt of earnings. Instead, the value of the plan itself continues to grow. This is great news to your retirement plan value, but there are some serious tax consequences you must be made aware of so that you don't get caught in a potential tax trap down the road. Say you pull $250,000 from your retirement account and then go through the necessary steps to have it become the owner of your new enterprise. You work day and night to take great sacrifice to make certain your company becomes successful. As the value of the enterprise grows, your retirement plan is growing in geometric proportion. Each year, the corporation's P&L and balance sheet will reflect the new increase or decrease in value for benefit of the retirement plan. Let's say, hypothetically, that your business has grown to the point that you are going to need a fresh infusion of capital. This time, that capital is going to come from an outside party, and you are going to have to get an outside valuation firm involved, and the investors may not like the fact that they must also form their own C Corp. This isn't even the worst part. What do you think happens to your company should you ever get bought out by another entity? If you say, well, it's my retirement plan, give yourself a gold star. What if you are one of the lucky few and your company and your retirement plan that owns it grows to be worth several $1,000,000, or after your company sells to a third party? If you have begun to see the financial trap you have created for yourself, you get another gold star. If you are under 59 and a half and you want to take some money off the table, you will pay a 10% penalty for early withdrawal and then pay taxes on the distribution at ordinary income tax rates for both federal and state, if applicable to your state of primary residence. If you are in your late 40s or early 50s when your company gets a payday, you may be left feeling like you need to find a street corner to panhandle on because your payday may come much later and you could pay much more in taxes than you anticipated. You may have never thought about the consequences when you exit from the business if your retirement plan is the owner. But in our opinion, it is indeed something you should consider before you take this route. Be certain to inquire about the setup fees and the ongoing annual fees because they will increase each year as the value of the enterprise increases. Whether it's Killingsworth CPAs or another financial advisor who helps you with a transaction like this, our advice is to make certain you are informed as to all your available options, including your exit plan. At Killingsworth CPAs, we are here to help you become better informed business owners, as well as being knowledgeable about your taxes. We want to be a part of your success. For a complete review and consultation, if you are planning to take this route to fund a new or existing business, please give us a call at 770-552-8286 today.